All right, guys, it's Paul Singh at bullsonwallstreet.com with the weekly swing trade report. We're going to start this thing again every other Saturday. We're going to put out the weekly swing. And the other Saturdays, we're going to do a live coffee and stocks with Paul. So we'll be doing that next week. But let's look at the market today. We're going to look at the market. We're going to look at the key levels of indexes, game plan, what we're looking for going into next week, some key industries, and talk about two specific setups we should be watching right now in the market. First of all, let's look at the overall pattern. What do we see? We've been talking about this for a while now at Bulls on Wall Street. We see an overall topping pattern. Topping patterns are full of reflex bounces, and that's what we might be seeing here. We have the arrow drawn here. Let's dig in a little closer. You can see price in the S&P 500, and this is also true for a lot of stocks, a lot of different sectors, a lot of different industries, bouncing right into either a little above or below the 9 EMA. This is a key level here. Now we'll see if the market starts to stall here next week, or if it were to remount a little bit and then fill, we get to start establishing shorts again, dead cat bounce type setups. But if the market can consolidate a little bit here and then break through, we might have that moving average sandwich where we see a move from, say, the 9 EMA up to the 50 EMA. And we can play a bounce there, and then we reassess when we get to the next resistance level and see if that thing fills. And let's actually pull up the intraday charts here. Let's do the 15-minute. We can go back, say, a month here. And if you notice, there is a little bit of a different character in the market in terms of this downturn. Here, as we see, what you're going to notice is through this kind of top here and this move down, while there were some green spikes, the green spikes were generally smaller than the red spikes. So essentially less, even on bounces, less buying than selling. Notice here this month, even in the downturn, the trend has kind of changed. And this is often what happens before we get some support and a move higher. So we're seeing here, look at these bigger green spikes now. And while there have been red spikes, the red spikes have been a little smaller. So if we're looking for positives, that's probably it right now. Also, if we look at, I thought I had this up. I don't. Let me just pull this up real quick. The CNN has a good market sentiment indicator. They call it the Fear and Greed Index, which is a great name for it. And if we see here, this thing is heading to extreme levels. Take a little bit to pull this up, so I'll get back here and we'll talk a little more about what we're seeing. But if we see here, we want to see the S&P 500 and any other areas we're looking at get above that 9 EMA. We can see the Qs also up to that level. And you see this line I've drawn goes back to 2017. This was a key level here. And notice that when it finally broke through that level, we had a strong move. And then when it pulled back right to that level. And we're testing that level right now. Broke through it. And that corresponds right with where the 9 EMA is on the Qs. And then IWM also essentially the same thing. So we've seen an extreme move down and potentially another reflex bounce. But let's look at the Fear and Greed Index here on CNN. And what we see is it's at extreme levels here at 12. Usually we need something like that to get a sustained bounce. I'd like to see this thing even get more extreme here. If this were to get down close to zero, obviously that would be very good for a potential bounce. But we'll take what the market shows us and reveals. And right now it looks like we could be in a bounce. I would say there have been a lot of fake outs here, so we should be careful. Let's look at some other industries. Housing, which has been putting a very strong topping pattern. I've got an ETF list here up that I track, filtered out for the last 5 days. And you'll notice here, housing was one of the only major indexes that was actually positive over the last 5 days. We have housing here. Biotech was as well. And biotech is really beaten down. If we get a bounce, biotech is an area we might want to look at. And maybe not the stocks, because the stocks can be so volatile. But the indexes themselves are volatile enough to trade. So IBB, we have XBI as well. And we can use leveraged ones like LABU. You can see here, really beaten down. It only has to snap back part of this big loss here to get us good gains. So, just getting up to here where it was literally, just 2 weeks ago, would be essentially a 50% move in LABU. That's the kind of risk reward we're looking at right now in something like this. So worth speculative plays to maybe enter this around 6. Maybe you have a stop of about 75 cents for a potential $3 gain, which would be essentially a 50% move in a $6 stock. So that's the type of potential we have here. And if we were going to go all the way up to the 50-day moving average, you're talking about 100% gain when it barely even covers the losses that it's taken in 2022. So we're in a very interesting spot here where we can take these little small speculative shots and get really big gains if they work. If they lose, no big deal. Semiconductors were also positive next year that last week, and just about everything else was negative here, even the stuff that bounced. But nice bounces on Friday. Cloud, nice bounce here. What you're going to notice here, let's actually pull up ARK. Obviously, ARK has been crushed. If you don't know what ARK is, it's a growth ETF that a lot of people track, and it was crushing the market during the bull run here. And now that the market has tanked, it's tanking way worse than the market has as well. So that's basically what you're going to see here with ARK. You're going to see when the market is running, these growth areas are going to run faster than the market, and when the market is tanking, it's going to tank faster. So if we are expecting a bounce, ARK is a good way to play it because it's likely going to move faster than the market is. So you could trade ARK, or you can take some of the ARK type stocks. SE is one we're watching over in our Bulls on Wall Street swing report. You can see here 22% here. A lot of these guys also have heavy short interest. And when they have heavy short interest, you get a little short squeeze as well. And you can see really big bounces in these things. Here's Roblox, one we're watching. Also a big move, 15% on Friday. So these are the type of things we're looking at. Growth stocks, easy way to do it is look at an ETF like ARK. We have an IPO list of stocks. We're not going to go through them right now, but in the report we go through them. We have an IPO list here of a bunch of IPO stocks, recent IPO stocks we track, and then a lot of software stocks are good, are setting up well for potential bounces. So that's what we're keying in on right now. Also, we like metals, XME. If you look at the metals ETF, this was a relative strength area, even when growth and everything else was falling apart. In 2022, metals were very strong, but now have declined in the last month and a half from 66, the ETF from 66 down to 50. But if we look at some of these stocks, like US Steel here, has gone from 38 down to 24. FCX has gone from 52 down to 35 here. So these are good potential rubber band bounce plays as well. And a nice thing about these, when we're looking at the growth stocks, when we're looking at the metal stocks, we can play them as bounces. But if the bounces fail, we can flip these stocks very easily and start shorting them, because then they're going to give us essentially the short setups. So that's what we're looking to do right now, watching the indexes, looking at these key sectors, especially the growth areas, software, and some other tech areas, and then metals as well, especially industrial metals. Now let's quickly go over these setups. I mentioned 2 of them, and that's basically the setups we're looking at. Very simply, we can go more in depth in them, but if you just want a general, really quick 10-second view of what the setup is for the dead cat bounce, essentially you have something in a downtrend. It bounces, comes into some type of resistance area, whether that's where price action was, whether it's a moving average, and then starts to fail at that area. That's where you can start shorting, and that's the dead cat bounce. We have rubber bands where essentially the market has been going down, or the stock has been going down. That's what we've seen right now. They put in a reversal, clear a resistance level, and then start bouncing. And then you can get a rubber band turning into a dead cat bounce as well. So you can potentially trade both there. Now, the other potential play, which we don't know if it's going to happen, we know we've got these setups coming in, right? Rubber band, dead cat bounces. But if we continue to start to clear resistance levels and make higher lows, then we have a bottom formation and trend plays. Now, the future will tell us if we actually get those, but we'll be waiting to see, do these bounces turn into the bottom formation, the higher lows, and the potential trends that might be in play. So that's essentially the game plan right now. What we're looking at: dead cat bounces, rubber bands, and potential bottom formations. All right, so that's the weekly swing report today, guys. If you're interested in more, you can sign up for the Bulls on Wall Street swing trade report. Here is Friday's report. You can see here we have a little summary. We have the stocks in play that we're watching. And then most importantly, the 5 to 10 minute video every day that goes over everything. All right, guys, have a great weekend. Talk to you guys soon.